And joining us now is the one and only Joey Krug, co-founder of the Forecast Foundation and the Augur Project. Hi, Joey. Thanks for joining us. How are you?
Good. Thanks for having me.
Good. So why don't you tell our viewers just a little bit about what the Augur Project is, what the Forecast Foundation is, and how you came to this point in the project's history.
Sure. Let's see. So Augur itself is a peer-to-peer prediction market or betting platform. And the Forecast Foundation is the entity that contributes a lot to the development of it. I guess I'd say how it got started was really in late 2014. We were basically playing around with stuff in the cryptocurrency space, things like Ethereum, Bitcoin, et cetera. And we'd really been thinking a lot about what are interesting use cases for the technology. And if you look at Bitcoin, it really enabled sort of kind of global peer-to-peer payments at pretty low fees, and thought about, well, what else could you use that for? And one of the most interesting things you can use payments for is basically betting or trading. Mm-hmm. And so that's kind of the inception of the idea. And really for the past 4 or 5 years, we spent a lot of time on R&D, building a kind of decentralized peer-to-peer where everything happens in your browser, betting platform. Actually, it's a really hard technical problem. So it took us a long time to even get the first version out the door due to that.
And so this is a decentralized blockchain-based prediction market, basically, where you can buy and sell your forecasts on what kinds of outcomes.
Yeah, so it's pretty generic in the sense that a user can create yes or no markets. They can create basically multiple choice markets, and they can also create these things called scalar markets, which have kind of a range, from one number to another number, like 0 to 100 or 0 to 350 or whatever. And so people can make markets on, sporting events is one category, political events is another one. In the first version, there was, some people who made some markets on cryptocurrency prices themselves, which sort of makes sense because trading takes place in cryptocurrency. So it makes sense that people would use it for that.
Sure. Yeah. So the scalar markets are interesting. So instead of just a yes or a no, you could, we talk a lot about elections betting. You could bet not only on, which party is going to win the White House, but you could say, what's the electoral vote count of the winning party going to be? And if that's trading at 300, but you think it'll be 320, you could take a position in that contract, and then your payout would be larger the higher it goes above the strike price that you're betting on.
Yeah, exactly.
Okay. Interesting. So some of the categories you mentioned, you talked about sports betting, basically crypto derivatives. We talked a little bit about election betting, which we'll get more into, but these obviously touch on various different kinds of legality and regulatory frameworks, both in the US and elsewhere. How does that affect the Forecast Foundation, the Augur Project, and traders in these products, on these crypto coins? Do traders need to worry about what the legality is in their jurisdiction? Does the Augur Project need to worry about that? I mean, do you, as the Forecast Foundation, kind of leave it hands off and say, we create the project, we create the technology, users are creating the contracts, what they do with it is at their own risk, and we sort of wash our hands of it? How does that work?
Yeah, that's a good question. And so, to date so far, all that we've done as the Forecast Foundation is we've basically written this software and published it to GitHub. So we don't actually even host the user interfaces that people run. Like, for instance, the main UIs that people use are actually hosted on IPFS, where people just sort of upload them and they're actually hosted in a peer-to-peer fashion. The other thing I would say is, at the Forecast Foundation, we really are just writing software. We're not actually creating any markets on Augur or trading in the markets ourselves. And so I think that's when you start to get into, regulated activities. Writing software itself is traditionally not a regulated activity, but when you start doing certain things with the software, that's when you start to run into potential issues. So I would say for users of Augur, yeah, it's definitely something you need to be aware of. I would say particularly if you're creating markets, that's a certain thing where you probably only want to do that from certain jurisdictions and certain scenarios. Like, for instance, there's a for-profit on top of Augur that's based in the EU, based out of Spain. It's not our for-profit. It's another company called Guesser. and they're making certain markets that they think they can legally make from there. But if you were, say, a random American person, I would not recommend creating a market on top of Augur.
Creating markets, but is it legal for me to go on as a U.S. based person and actually trade in the markets if I'm not involved in the drafting or the settlement?
Yeah, that's a good question. It's something that hasn't really been explored a lot. The main thing you would have potential concern about is, the Wire Act, which sort of regulates, it's a law that was enacted, I think, in the 60s, that basically regulates betting in the U.S. And for Wire Act, there has been some court cases about it, which have stated that if you're not doing it for the purpose of a trade or business, so if you're not like market making, you're probably fine. So the example is there's been a few bettors who have actually been prosecuted for betting on offshore platforms or whatever. And when those bettors were able to prove that they weren't market making, so they weren't taking both sides of the bet, they were just kind of taking a bet on what they actually thought the true price was. Nothing ended up happening. The judges ended up ruling in favor of the bettors or traders. Now, the main area that you would definitely have a lot of concern is if you're market making, right? So if you're in the US and you look at, a market on Augur and you say, okay, I'm going to market make a spread on the both bid and ask side, that's something that I would probably be concerned about, and probably wouldn't be the smartest thing to do.
Right.
But if you're just taking a straight bet, again, I'm not a lawyer, and I definitely say get legal advice, right? But
yeah.
I think based on historical cases, that appears to be a safer thing to do if you're just taking a straight bet on something where you're not market making around it.
At least, right? Yeah, it's interesting. I mean, this touches on so many areas that are really at the forefront, not only of technology, but of regulatory frameworks. I mean, you have crypto in general. The U.S. regulators are continuing to spend a lot of time figuring out what is cryptocurrency. How do we regulate? Is it a currency? Is it a commodity? Is it a security? Is it real property? And how do we tax it? How do we regulate it? How do we regulate transactions denominated in crypto coins? And so you have that angle, and then you have, of course, the almost equally murky world of online gambling and or derivatives regulations in the U.S. And that's something we've seen both in more traditional prediction markets like PredictIt, Iowa electronic markets that deal in a carve out from existing derivatives regulations. Then, of course, you have the heavy boot print of the full, CFTC regulation at the other end of the spectrum, from kind of unregulated to fully regulated. And this is sort of the grayest of gray areas, from all angles. And so it's part of what makes the project exciting. Also part of what makes it potentially minefield in terms of who can use it and when and how. What are the other sort of upsides and downsides of being decentralized in nature and being based on the blockchain, not denominated in fiat currency, and not having a central, market drafting and settlement source?
Yeah. So I'd say, starting with the downsides, I would say, the biggest one is that it's really hard to build this stuff, right? If we were actually operating the platform, we could do so many things so much faster, so much easier. Like if we had the ability to host the UI, if we had the ability to, there's a lot of technical things you could do to make it way faster, cheaper, and easier and better to use. So that's kind of like step one, I think, is that's the biggest downside. The other downside you have is like acquiring cryptocurrency is still not that easy. Even if you use Coinbase, it's going to take you probably 4 or 5 days to get your money out of there if you're a new customer. So those are problems people are working on solving, but it's just a new technology. So it's going to be a while before that stuff is kind of settled. I would say the upsides are, you have a lot of risks that kind of get mitigated, assuming you solve the technical problems correctly. So things like, a lot of offshore books have a pretty high payout risk. You may not actually get paid out. The other one, this is kind of, getting away from prediction markets a bit and more into actual betting. You don't really have these problems in prediction markets, but with betting, one big risk is that if you start winning, the platform will just turn you off. They'll say, hey, you're not welcome here anymore. You can't place bets. You're taking our money. Due to the sort of peer-to-peer nature, that's not really much of a risk here. I think long-term, the biggest upside is sort of how I think about Bitcoin. So you think about Bitcoin, Bitcoin enables people to send money from point A to point B. And the way people have regulated it, the way regulators have looked at Bitcoin is they basically said, okay, we're not going to regulate, the protocol itself. What we're going to do is regulate things built on top of it. And so if you sort of envision, this is a long time, right? It's like 5 to 10 years, maybe even 15-year time horizon. You can envision what that could look like for a platform like Augur, where it sort of looks like this protocol that other people build on top of. And so you might actually have regulated for-profits on top of it in different jurisdictions, but they're all sharing the same liquidity pool, similar to how if I buy Bitcoin on Coinbase, send it to a friend in Nigeria as an example, and then they convert it back into fiat in their jurisdiction. Both those endpoints are regulated, but the protocol itself wasn't. And so you have kind of this larger liquidity pool than you might otherwise have. I mean, I think that's where that would be kind of the cool end game, in the long term.
Right. So some of the traders we've talked to in sort of getting a sense of how they view Augur as, part of this prediction market landscape. One of the concerns that they've brought up is this sort of reputation-based system by which traders settle contracts, and how going forward Augur can address the issue of improper, whether simply through negligence or carelessness or honest disagreements or outright fraud, how they can address disputes over wrongful settlements. I mean, I guess part of the one of the distinguishing characteristics of this platform is that everything is decentralized, including that settlement resolution process. When you have that, though, with no central authority as sort of part of the fundamental DNA of the system, how do you control for that, or can you control for that through a reputation-based system or any other means?
Yeah, it's a good question. So one thing I would say is it's typically not the traders themselves that are settling the contracts. The reporters are typically separate. There could be overlap though. They tend to be two kind of separate groups of people. The other thing I would say is the biggest issue with these markets on Augur is, because you're right, it's an open platform. So somebody can show up and create something. And they can create something that's sort of nonsensical, right? They could say, well, if it's really nonsense, they could say will ASDFGHJKL,
Sure,
be president in 2020. And that's just nonsense. And the answer is either no or the market's invalid. In the first version of Augur, this sort of concept invalid, the way it worked is if a market was invalid, funds basically get paid out at essentially even odds across the outcomes. And it was a sort of a naive technical solution that was kind of the simplest thing we could do at the time. In V2 of Augur, the way it will work is invalid is a separately tradable outcome, which means two things. The first thing it means is you could actually buy insurance against the market being invalid. I think some people building on top of Augur will probably do that automatically. They'll have their users buy insurance sort of automatically. The second piece is that it means traders can sort of flag markets that they think will be invalid. So a good example of this is in V1. People made sort of tricky markets that they knew were confusing on purpose. So they would say what would the price of Bitcoin according to twitter.com/Bitcoin price feed 123. Then they would kind of put the wrong price. In Augur it's a protocol. It's a dumb system, right? So the reporters just reported and said, well, the price according to this source was whatever, even if that's not the price that people actually know is true in the real world. And so what you can do in the new version is traders can basically bet that market's going to be invalid. And then sort of for the end user, you could sort of by default, maybe by default, the user doesn't see markets that have a high probability of invalid. And if you're a hardcore user, you can trade them and show them or whatever. But for the average user, maybe they click a button in the UI and it automatically kind of doesn't show markets with the invalid probability of above 5%. So that's one thing you can do. The other thing you can do is sort of have community curated templates. So for example, if you're making a market on a soccer match, well, there's pretty well-known rules for how to resolve a market that's a soccer market, a soccer game. Pinnacle has rules for that. Betfair has rules for that. You can sort of take the best of them, put them in a template. People can kind of make pull requests or make edits to the code to improve it. And then by default, if you're making a soccer market, you probably just end up using that template more often than not. And then users can kind of get assurance that the market's going to resolve correctly. It's kind of a long answer, but the last thing I'd say on this is the thing that's important to emphasize is with these cases, anything that's happened kind of wrong from the end user's perspective, it hasn't been because the reporters reported the wrong answer. It's been because the market itself was a purposely confusing question. or the market itself, had a source that wasn't generally recognized as being like a legitimate source,
Well,
like the
that's
Bitcoin
why
price
it's
feed.
important to better codify this notion of an invalid market and have that actually be a tradable outcome too.
Yeah, yeah, exactly. And so if you codify that, and then if you have like another thing is encouraging users to create markets that sort of use general knowledge as the resolution source. So we went back and looked at the data. And for most markets that use general knowledge, it's kind of like this concept of like, well, you should know who became president, or you should know who won this game or whatever. Almost none of those result is invalid. Most of the things people confuse users were when they put in a source that was like that they controlled that was obviously misleading.
Okay. And now I want to ask you a little more about the upcoming version 2, but real quick, just to get a better sort of baseline of the mechanics of this, the reporters that actually essentially input the settlement data that guide how, whether an event has happened or not, or to what degree an event is, what quantifiable degree an event has happened. What is the feedback mechanism? How does it work? What gives the reporter the incentive to report accurately? In other words, and jumping ahead, it leads to the obvious question of how can it be gamed, and how does the system protect against people pooling their resources in order to influence or buy or become a particularly influential reporter that can, after amassing huge positions in some headline dominating market, then cash it out the wrong way and take the money and run.
Right. Yeah, it's a great question. So we wrote like a long paper on this that goes into all the kind of edge cases and reasons. But the shorter answer is I'll kind of give you a few bullet points. So the first answer is like the way it's secured is by economic incentives. And so if you dial in deeper, one level deeper into that, the incentive is such that as long as at any point in time, like the amount of value that's resolving on Augur or being paid out is lower than the value of assets used to secure it, these incentives should work out. So an example would be, if there's $1 million that's going to be paid out on Augur on Thursday, or say over the course of a month or whatever, and the value of reputation that's used to secure Augur is like 5 million, then you can have confidence that Augur is going to be secured, assuming you like follow these other assumptions that we lay out in the paper. And the assumptions are basically that there can't be like one actor or group of actors who control over half of all the reputation in the system. So that's kind of one constraint. The other constraint is that the actors have to be like rational from an economic standpoint, or in simpler words, they have to be greedy. So for instance, in any system, if you assume that someone's willing to do something that makes no financial sense, no system really holds up to that. Like Bitcoin is, as an example, would be insecure if somebody were willing to just continuously throw billions of dollars to try to cheat the system. But assuming people are doing kind of what's in their best economic interest, it should be secure. And the reason is these reporters have basically dispute rounds. So if somebody walks up and says, hey, the outcome of this market is 2, when everybody else knows it's 5, that can be disputed back and forth. And these disputes kind of continuously happen. And eventually either one side gives up or the whole network splits into like 2 networks, where one network says 2 is correct and one network says 5 is correct. And the sort of idea is that most people are going to migrate to the network that actually reflects reality, besides the people who are trying to like cheat the system. And as long as there's enough users who actually care about what reflects reality, that side should sort of win the fork. A lot of this sounds kind of abstract and weird. And so I'd encourage anybody, if you're actually really interested in this stuff, there's about a 20-page paper we wrote about this called the Augur White Paper. We released a new version a bit over a year ago that kind of goes into the nitty-gritty details on this. We're probably also going to post like a shorter explanation that's kind of more concise about how this works. But the short answer is basically you're relying upon economic incentives. And if you buy the argument that, as long as the majority of people who own rep or who are staking rep are going to do what's in their best interest, and that includes people who are like, buying the other side of a market and trying to resolve it wrong. Like it even accounts for those sorts of scenarios. And so if you assume people are rationally greedy, the system should work. If you have some weird actor who comes in with like $1 billion and just says, hey, I want to break this, then it's probably not secure against that sort of threat level.
So is there not a case in which an actor like that that's got a very large bankroll can quietly accumulate a stake in rep, acting rationally, being a good actor in the system, and while allied with a party who is amassing a position in 2, when the outcome everyone knows is 5, at presumably very cheap prices because something everyone knows is wrong. But would it be conceivable if we scale volumes up enough to amass a big enough position in that obviously wrong, very low priced contract that then it does make sense, that it outweighs the cost of the undertaking this intentionally wrong resolution given the size of the windfall? Should you win the fork? Should you accumulate enough rep to win the fork in that case? Is that sort of an edge case through which someone might try and slip through, or is the protocol designed such that that's not really a concern if people are acting rationally?
Yeah, that's a good question. So that's basically the first assumption is the way you can look at that is the only scenario that would be profitable is if the value you could kind of like steal by doing that attack is higher than the value of capital you have to stake to execute the attack, right? So
Right.
if it costs you, if it's going to cost you, because the assumption here is that like once you execute an attack like that, the rep you do it with is probably going to be worthless because everyone's going to fork away. And so, if it requires half of all rep, and say the market cap of rep is 100 million, it requires $50 million. If more than 50 million is resolving on a given event, and you can buy up enough of the other side, you have to buy up enough so that you would get $50 million worth of payout, which would be pretty hard, but it's technically feasible. Then you would have a scenario where it's profitable to do an attack. Yeah. But this is it's the sort of thing that's easy to detect, right? So like, if this started to become a problem, people would probably like discourage people from trading on Augur. Like it would be dangerous to trade on Augur at that point. And, people could kind of shout it from the rooftops. I'm sure there'd be news articles written about it, that sort of thing.
Right. Yeah, I guess it might depend in some measure on how quickly the volume of trading and open interest on Augur increases versus that market cap of the underlying rep that one would need to acquire. In other words, as long as it becomes more and more expensive to overtake the network, then there are fewer and fewer, real world opportunities where you can establish a big enough position that it makes sense to take your one shot to blow all your rep to win some market improperly. So it's an interesting theoretical question. I'm sure one you spend a lot of time contemplating. But let's move on to another. Another interesting distinction between Augur and traditional prediction markets, or let's say centralized prediction markets that have a single authority that originates and creates and drafts and settles the markets, and that is on the range of topics that they can trade. And we talk a lot about PredictIt, where it's a pretty narrow scope of events, at least compared to an exchange like Augur, where it's binary political events that don't run afoul of certain regulatory restrictions, some of which are acts of terrorism and assassination and war and things like that the regulators have specifically said are not things, even in an unregulated market with the special carve out, that they cannot trade. A while back on version 1 of Augur, we did start to see some death markets or assassination markets pop up, and I don't know what kind of volume they attracted, but is there any concern about whether the sort of more unseemly kinds of markets may, even if they're not a significant portion of the volume market wide on Augur, that they may give the marketplace sort of a more unwholesome vibe that could both keep additional users away and perhaps raise the ire of regulators that are otherwise taking sort of a wait and see approach. So you're saying, this is sort of interesting. We don't really know how to regulate, so we're not going to step in yet. If certain things like that become the more headline grabbing aspects, is there a regulatory or reputation risk to Augur or to the prediction marketplace worldwide?
Yeah, it's a good question. It's something I thought about a lot. So it's kind of a few different angles to think about this problem, and I'll kind of give you a few of them. So one of them is, first it's important to emphasize that those markets got almost no volume. It's my suspicion that the volume that they did get was by the person who created it. It was like $50, I think. So very little volume. The second thing I'd emphasize is that, these sorts of, these sorts of markets, since Augur's an open platform, people can technically create them, but there's also no reason you couldn't really trace that back to the real person who created it, right? So the blockchain is pretty easy to track transactions, and there's no reason if a regulator really wanted to, they couldn't basically subpoena an exchange to figure out who created those markets. And in fact, for the ones that were created on Augur V1, I happened to check into that and look just on the blockchain with public data. You could tell that the transactions came from Binance. So like you could theoretically, ask Binance to tell you what user created that market if you thought it was an actual concern. And the last thing I think I'd say is, if you look at something like email or word processor, you can use email to send a ransom note or type one up on Word and fax it over to somebody. It doesn't mean that, Word as a whole is a terrible thing because of that. And so if you think about any sort of tool, which is essentially what Augur is, it's a sort of like generic tool that you can use for a lot of things. I would say, most of them good things, but definitely with any tool, some people can use it for bad things. I guess the very last thing I'd say on that is, by default in Augur, the markets are sorted by, sort of how much liquidity they have. And so, I think most users probably wouldn't even come across that market unless they're digging really deep into the UI to find it. It's like most people probably wouldn't be put off by it because they wouldn't see it to begin with, because people don't seem to be too interested in trading on them, which I guess is a nice positive thing for humanity, that people aren't interested in trading on that kind of stuff.
Right. So let's talk about version 2. When can traders expect to see it?
Yeah. So let's see. Version 2, we're looking to launch in a few weeks. I'd say the time scale now isn't months, it's weeks. There's sort of a few main things remaining to kind of get ironed out, which is some parts of the 0x integration. So I guess very high level for version 2, the main changes are you're trading effectively in this currency called DAI. It's a stablecoin pegged to the US dollar, created by a project called Maker. And then the other one is that trading should be a lot cheaper because it's 0x. You can basically place and cancel orders for free. Filling orders still cost money because it's on Ethereum. Someday that'll eventually, become a lot cheaper, but right now it's still fairly expensive. And so with these kind of two integrations, the stablecoin and 0x, there's been like kind of a good amount of work to like iron out potential issues that have popped up doing these integrations. But I think, we're looking at the scale of weeks to get this thing, get to code published.
Okay, and we're recording this January 22nd, so we're looking at sometime in February, likely February, March.
Yeah, February, March.
Okay, and you mentioned fees too. So what would a new trader expect for sort of the all-in fees upon the launch of version 2? And is it based on just a straight commission percentage of the value of the trade, or cost per trade? How does that work?
Yeah, so the way it works is in Augur, there's kind of like three places fees go. There's the market creator can set a fee. There's the fee that goes to the reporters to resolve the market. All in, those two kind of add up historically to about 1% of your bet. And then the last fee is the fee for Ethereum itself. And that varies because it's like an actual marketplace, the way they determine these fees. On average, I think it'll be about 75 cents for that fee. And so if you add it all up, Augur itself may not make financial sense to do a bet at V2 launch below like $100. If you're betting $100 or more, I think the fees are, all in end up being pretty low, because you're basically talking 1% plus $1 or so should be what people are looking at.
And that's per transaction or per round trip? In other words, if I buy something and then sell it, am I doing 1% plus 1% plus 75 plus 75? It's round trip 1%.
Yeah, round trip 1%. The 75 cents, which goes to the Ethereum miners, is probably going to be per transaction though. Well, right. So if you're placing an order on the order book, that's zero. If you're taking one off the book, that's where you get the 75 cents.
Okay, right. And right now in V1, how many markets, if you even know, how many contracts typically would be active at any given time, and what kind of volumes do they see on average?
Yeah, so markets on V1. So the one thing that's kind of been happening is V1's sort of been winding down because there's no way to like force the migration of people over from one version to the other of Augur. So people are kind of like creating fewer markets on it for that reason. But I'd say at any given time, there's probably like 5 that are like actually have any decent volume. I would say, there's not that much traded, maybe like 100,000 a week. in dollars. And then beyond that, there's tons of other markets that are live, but like people aren't using them.
Right.
Like I at the site right now, there's like 100 markets. If you like, basically like open up all the sorts and stuff to show you everything. But of those, any given point in time, maybe 5 are active right now. A
Yeah.
few months ago, when more people were using it because they weren't holding off until V2, it was like 10 to 15.
And which ones tend to be more popular? Is it big ticket sporting events, headline grabbing political outcomes? What tends to do well?
Yeah, so historically, it's basically been some of them have been kind of like crypto markets, crypto price markets. There's also been some sporting events, and the third category is like political events that are like not necessarily that many other places have them. So like an example would be like betting on the UK, sorry, not the UK, the Canadian election, or Brexit. But more so like the Canadian election was an example where Hank Augur did a good amount of volume there, maybe 150 or 200 grand, versus like the Betfair market did, I think, 50. These numbers are napkin cloths. I know Augur did more than Betfair, but I don't remember the exact number.
Right.
So things were like, there's not that much interest on other venues, but people are kind of interested on Augur.
Right. And now I would presume that there's nothing in the protocol that prevents um, multiple users from creating effectively the same, if not exactly the same market multiple times. And so what tends to enable a user to make the one that's going to become the dominant one? I mean, with the network effect and an exchange economy, obviously you're going to get volume chasing volume and liquidity chasing liquidity. So you're quickly going to have sort of the one central clearinghouse market for each major outcome. But if once a new thing happens, like Trump's impeached, and suddenly people want to bet on whether he's convicted, or Joe Biden wins the nomination, people want to know whether he's going to be elected president. As soon as there's, I'd presume, a sort of a feeding frenzy of folks wanting to get in and establish a market that they might be able to generate some good creator fees off of. What are the distinguishing features between multiple markets that might be effectively or exactly the same that would give you a better chance of becoming the one that is the one that people actually trade on?
Right. And this is something that we thought a good amount about early on, because like it's one of the first things people bring up when you talk about a system where it's kind of open and people can create markets, right? They're like, well, what about duplicates, right?
Right.
So it's something we thought about a lot, and like didn't really know how it would play out until it was actually out in the wild. And in practice, it sort of followed like the power law, where there's typically only really one popular market for any given event, at most two, but usually just one. And it's tended to be, from what I can tell, I haven't done like super rigorous data analysis on this or anything. It's all public, so somebody could do it. But when I've noticed anecdotally, it tends to be you need a fee that's relatively low. Like if you're charging above 1% or so, your market's probably not gonna take off. But like the difference between 1% and 75 basis points is like negligible. The main differentiating factor, once you have reasonable fees in your market, is liquidity, right? Which kind of makes intuitive sense. And so if a market creator puts some initial liquidity on the books, or even continues to sort of add liquidity to their market, then it tends to win. And so like I've noticed anecdotally, like some examples where like somebody has come in and created a market with fees that were half of the first one, but the first one just had more liquidity, and the market maker was market making that market. And so it kind of stayed the winner.
Sure. Yeah, people will definitely pay for liquidity, especially in relatively low liquidity markets. So that they may incur a slightly higher fee for that. I wonder whether this then would lead to, presumably it has, to sort of an unofficial marketplace on third-party messaging apps or Reddit or wherever else, where creators, as soon as they launch one, especially if there's a bunch of duplicates, would then go and try and promote their market right after launch to try and get that initial seed liquidity that then sort of snowballs and generates a sort of invincible position as the dominant market. Do you see that, or do you follow kind of chatter like that among the big creators that are out there sort of selling their new markets to the marketplace of Augur users?
Yeah, I haven't paid super close attention to it. 'Cause I'm mostly focused on the development side, but um, I have noticed it some. Like you'll see people post stuff on Reddit. You'll also see this, interestingly enough, from the opposite side of the table. So maybe not the market creator or even a market maker, but more like a bettor who wants to bet, a sizable quantity on something. Like I remember one instance where somebody posted on Reddit saying they wanted to bet, 50 grand on some specific, I think EPL match or something, at like right at the fair market price, and then somebody else saw it and matched the order. So stuff like that I've seen as well.
How would you compare Augur to other non-centralized, other blockchain-based prediction markets like Gnosis or Eraser, or a couple of the other projects out there that have had a similar idea, if not the same implementation? What makes Augur different from those others in the in this space?
Yeah, I would say the main thing is we're pretty like, for better or worse, kind of dogmatic about it being, really decentralized and peer to peer. And so, the sort of idea is like that when you're using Augur, that you're getting this thing it really is peer to peer, end to end. And that's like a lot of why like the first version sucked, as a user, because it was starting very early. I think version 2 will be better and it will kind of continue to improve over time. At some point, I think it'll be, it'll feel as good as like a centralized site. And we're not quite there yet, but that's the main difference is, other people may make different compromises or take shortcuts, particularly on like the Oracle piece as an example, or even other areas where maybe they're, hosting the UI on their own server or various kind of pieces like that. That's the main differentiator.
Yeah, it's interesting. And so it's more pure, I guess, in its genetic makeup in terms of its decentralized nature, which obviously would appeal to folks that are looking for this kind of market solution to begin with. But it also, I would think, from your perspective as the forecast foundation, it makes sense in terms of the project's own longevity and sustainability. I mean, if regulators, whether in the U.S. or elsewhere, do decide that they don't like this and and want to come in and stomp on it, having no institution or organization that is controlling any piece of it makes it harder. There's no plug to pull. There's no door to close. Unlike, as you said, if you've got a centralized UI or a centralized settlement source, then you may not be able to dismantle the whole project by sending in a team of FBI agents into some office, but you can probably at least slow it down and scare off new users. But having that sort of fully end-to-end decentralized approach, as you mentioned, probably I would think makes the project more durable than those that are less dogmatic, as you put it.
Yeah, I mean, we're sort of just publishing software to the world and really trying not to do much more beyond that. The other thing is it actually makes it cheaper to write software too. Like if we were running like a market making arm or creating markets and stuff, one, that's not like our area of expertise. I used to do a lot of horse betting on horse races, but like, in today's, sports or political market, like I probably don't really have much of an edge. So, I probably wouldn't be the best person to market make anyway. And it's fairly capital intensive and just sort of a different thing. So like just writing the software has actually enabled us to stay pretty lean as well.
Mm-hmm. You mentioned Gesser in the EU. Are there other sort of Augur-based or Augur-focused businesses out there cropping up, either to do the market making or to institutionalize the process of the market curation or of the reporting and settlement?
Yeah, so there've been a couple other ones, but they've in the past they've kind of like decided to fork off from Augur and basically like fork it and make modifications or sort of make their own version. Mostly because I think they think that they think that they can move faster on it. I think that once you actually try to do that, you'll realize that we're actually moving pretty fast. My main day job is I'm investor at Pantera Capital, and I see all the kind of projects in the space, and given kind of the state of the ecosystem, the Forecast Foundation actually moves relatively fast from a development standpoint. But if you're kind of looking on the outside in, you may think it's moving slow because just like regular software development moves so fast, but it's mostly due to the constraints that decentralization puts on you. So I think like, over the next year, also with the launch of V2, I think some of those teams will come back and just start building on Augur once they realize that it's kind of a whole mess to do it all on your own. But at the moment, the main one is really Guesser. There's a couple others I've heard of that are starting to pop up, but I'm not sure if they've raised any funding yet.
Yeah, I mean, it makes sense for that ecosystem to sort of fill itself out. Maybe it is a matter of just having V2 come online and being that much more of a robust nest, as you put it, for that ecosystem to develop. But given that the whole point of it is just publishing the software and sort of leaving the rest of the ecosystem to fill itself in, it seemed that there's a natural fit there for some institutionalized versions of the different components of the marketplace to crop up. So it'll be really interesting to follow along and to see to what extent that happens. It's a really interesting project. We really look forward to following along. Where can viewers go who are eagerly anticipating V2 to follow along with the progress and sort of see what's coming next?
Yeah, I'd say augur.net is kind of a good resource. We have like an email list where we kind of send people updates as well. You can sign up for on augur.net. And then also Twitter at Augur Project on Twitter is another place if you want to kind of follow more day-to-day kind of stuff.
Excellent. Well, we will be following along. We encourage our viewers to do so as well. Joey Krug, thanks so much for being with us today. It was a pleasure.
Yeah, thanks for having me.